Let's now move on to the markets here in Nigeria. Traders at Access Bank say they expect mixed sentiments to continue at the Treasury bill secondary market due to cautious trading by market participants. Victory Osanwese, a fixed income trader at Access Bank, joins me now for a mid-market update. Thank you so much, Victory, for your time. So, how are the markets shaping up midweek?
Thank you for having me. It's important that I start by talking about the system liquidity. This week, yesterday we saw the system open with a negative balance of 33 billion, and this tight liquidity situation led to an uptick in the OPR rates. Also, we saw the OPR rate close at 13.83%, and then the overnight rate close at 14%. So this tight liquidity situation is going to impact the fixed income markets, where we expect this to strengthen the bearish sentiment that has started to play out in the fixed income space. Speaking to the Treasury bills market specifically, we see a lot of bearish sentiment, especially on the short to mid-end of the curve, where we're seeing more offers than bids on those ends of the curve, where these Treasury bills are trading just above 5% levels. On the longer end of the curve, however, bills are also trading just below 6% levels on that term. Speaking to the bond market, we also expect similar trends to persist in terms of a bearish outlook, basically as a result of the tight liquidity situation that we've seen play out in the markets this week.
Right.
Also on Monday, the bond auction held, and we saw stop rates for the 2025 closed at 10.10%, 2032 closed at 12.50%, and then the 2042 closed at 13.15%. Although these levels are above the May auction stop rates, they were still below where we saw these instruments trade in the secondary markets just before the bond auction. Taking the 2025 paper as an example, that's already traded at 10.2 just before the auction, but that closed at 10.10%. So we expect the bearish sentiments to persist at least between now and Friday, and even as we just continue to watch this space.
Can you reflect very briefly on the impact of inflation? I'm sure you would agree that many are expecting inflation to remain firmly in double digits for the rest of the year. Is that influencing how investors are allocating to bonds? Are we seeing that reflect in any particular way?
Well, to be honest, we're not seeing a very strong impact in terms of inflation. Yes, inflation has been on the rise. We saw inflation touch 17.71%. However, there are other factors that have stronger impact on the market, one being liquidity, which I already spoke to. So we didn't see a strong reaction in the markets. Rather, we just saw lots of mixed sentiments at first, and in recent times, more of a bearish outlook in both the Treasury bills market as well as the bonds market. So inflation has not had such a sharp reaction in the market in terms of portfolio allocation. Of course, the investors will still demand higher yields, but at the end of the day, it's going to be a play of both demand and supply, and
right.
that has not led to significant impact in the markets.
Well, thank you so much for sharing your perspective. Been speaking to Victory Osanwese, a fixed income trader at Access Bank. And that's a wrap on our show for today. Many thanks for joining us. I'll be back at 2:30 West African time for Closing Bell West Africa.